clouds.
Hello, everyone. So today's meeting, everybody has their casual wine cup. And let's start our Wildfire Real Estate chat. And we have some great speaker here. And I will lead a room and have them introduce themselves. Jason, you want to start?
Yeah, absolutely. Hey, everybody. Jason Russell, Neo Home Loans. I'm a divisional president and a licensed loan originator as well. So I'm certainly excited to share some nerdy stuff as it relates to data on both the lending and the insurance side.
And Deborah, you want to introduce her?
Yeah, I'm Debra Pughsley, Epique team lead, partner of MayMay Huang, and welcome to our first ever wine toast, host, get the most, I don't know, chit chat. Hopefully have several more. So.
And then we have Renee.
Hi, Renee Inman with Acrisure, and I'm excited to be joining today with Jason, and thank you guys for having me. I'm looking forward to it.
And you're in what company?
We're Acrisure. We're insurance brokerage, and we're out of Sacramento.
Okay, awesome. And then we have Evan.
Yeah, how you doing? Evan Williams. Started in the insurance industry 18 years ago with State Farm, and I was with them for a few years, and then found a company called Beach and O'Neill Insurance Associates in 2008. Got started with them, and actually been with Beach and O'Neill, who now has transitioned over to Acrisure this past year, or well, a few years back, but now our name is officially Acrisure as of 2024. So now over 16 years with the company, and loving what I do. It's challenging, but loving what I do.
We love what you do. A little bit of history, everybody. I stand behind Evan and his team. Jason and I have probably 95% of our buyers have went with Evan for their policy quote. So.
Yeah, thank you for that. We appreciate it.
Yeah,
we appreciate you.
And Renee and Evan work together, and we.
Katie too, right?
Wendy.
Katie too.
Yeah, Katie. Oh yes, Katie.
Hi, I'm Kayti Jones. I'm the growth and practice leader of the West region of Acrisure. I've been doing insurance since 1994, working for independent brokerages. Similar to Evan, I landed at Beach and O'Neill about 12 years ago, and been enjoying and growing ever since, and love the team we work with, and very passionate about what we do. So thank you for having us today. We appreciate it.
We appreciate all of you coming.
Yep. Yeah, we definitely appreciate you for a busy day and come and spend an hour with us. And the reason that we want to start this Zoom meeting, just a casual chat, because of the LA wildfire, and there's just so much concerns and so much things that are happening and will happen, and we just want some question answer, and hope you guys can use your expertise and be able to answer some of the concern from me, from Deborah, from all the industry, consumer, buyers, sellers. So let's start. We only have an hour, so we have so much questions. So the first question I have is, can any of you give us a overall feels for what has transpired in California insurance market over the past few years? So who can?
I mean,
I can nerd out with data, but Evan, I would love your narrative, just to kind of you're in it every day.
I have no idea what's happening. No, I mean, I think we've all seen it. There's been some major fires in the past 10 plus years. I think everybody's, especially in California, has heard about the Paradise fires that took out, I believe, over 10,000 homes. Yeah. Tragedy, disaster. That was definitely a rough one for the insurance world, and obviously for people personally, and for the entire state of California. We actually had, I believe, Katie, you can correct me if I'm wrong, the only insurance carrier that we are aware of that's went insolvent since I've been an agent, and that was Merced Mutual went insolvent during the Paradise fires, so we had to deal with that. We had a lot of clients that we had placed with Merced Mutual. You know, and just I think overall, just with all the things that have happened with the fires and disasters and you know, obviously COVID, you know, we experienced COVID in 2020 and beyond. There's been a lot of different things that have led to where we are today, which is really a time of like instability in a lot of areas of our lives, including insurance. The rates really, I think overall, and I'd love Katie to expand on this too if she wants to after kind of I'm done, but the rates really haven't been able to keep up with the risk that the insurance carriers are taking on. You know, we've all heard about and experienced increased building costs. Like I mentioned, COVID, and actually May of 2020, there was some price control that was done in the insurance industry in California. That actually, so basically no rate increases in May of 2020. That actually stood all the way until December of 2022. I think Allstate was the first to be approved for a rate increase in December of 2022. Multiple carriers reported loss ratios of over 100% in 2022, which basically indicated that claims cost was higher than their incoming premium. And it's not only, I know we're talking a lot about homeowners, but it's not only homeowners. Auto insurance is very difficult. I mean, you've probably, if everybody's paid attention, I assume they have, to the news, you know, with inflation over the past few years, we're all, you know, experiencing higher grocery prices, higher prices on, you know, everything that we're purchasing out there. And I think, don't quote me on this, but I believe, you know, like it was like eggs are like 12% up, you know, milk's up 13%. And I saw one time auto insurance was up 51%. So it's actually been going up much higher than the rates of groceries. So that's been rough, you know, for clients. You know, I have two teenage drivers, and I pay a lot for insurance myself. I don't get any breaks for being an insurance agent. And you know, some of the stuff is really just, you know, some of the stuff they blame, you know, a lot of people out there blaming, you know, insurance carriers or getting mad at their insurance agents. Or I mean, I think like State Farm has taken the brunt of it probably because they canceled a lot of policies. But there's a lot of companies that cancel policies and non-renewed policies, you know, all over California. And then we actually need companies to be able to write business, like as many companies as possible. Like some agents may think, oh, State Farm doesn't write, or Allstate puts a freeze on writing business in California homeowners. Oh, great, I'm going to get all that business. But that's not actually what we want, because then it saturates the market. And then we all, like a lot of our insurance carriers, have actually put a limit on how much business we can write per month, or just put a complete freeze on writing business because all the business is flowing to them and then they can't handle the risk. So the risk is outweighing the amount of premium that we're bringing in. So you'll get sometimes when it's happening more and more, where I'll put together a quote and it'll say, basically it's not getting declined for wildfire. It's not getting declined for previous claims. It's not getting declined for, you know, maybe the roof's too old or whatever. It's getting declined because that carrier has reached their maximum capacity in that area. So we're getting that underwriting edit a lot nowadays. So we're just absolutely just doing our best to grind through it. It's probably tougher right now than it's ever been. You know, I think over the last couple of years we've been experiencing it, but we've also been feeling like, okay, maybe it'll get better. Maybe it's going to get better. Maybe it's going to get better. And then obviously the terrible fires in Southern California, you know, a couple weeks ago, has really put the, you know, industry in another tailspin or whatever. And we're all just not sure. We're just taking it day by day, you know, and just adapting as much as we can. So we'll keep our fingers crossed, keep praying. Hopefully things get better, and hopefully there's not as many fires and different disasters that happen in California and beyond. It's not just California. You know, we're experiencing a lot of these things all over the country.
Well, that was some really good insight, and you touched on a few things that I never even heard of or thought of before. So that was really good information as far as why they would be declined, other than the obvious. I would have never thought about that. So that was really good information. Thanks, Evan.
I would just to give you guys a visual, I'm just going to share my screen real quick, just to give you guys a rough idea across the country, kind of what we're seeing in terms of non-renewal rates. And you can really see, you know, the darker the shade of this color, the higher the percentage of non-renewal is across the country. And as you can see, you know, here in California, especially in Northern California, where, you know, you're more rural, you've got non-renewal rates of 7%, 5%, 6.5%, where, you know, 4 years ago, if you got to 1% non-renewal, it was a pretty big deal. Same thing down here in Florida, right? It's not wildfire risk for them, but it's certainly hurricane and wind risk. So we're seeing that absolutely. It kind of backs up what Evan is talking about. And then the same thing with policy increases, right? So you can see the darker the blue, the higher these policies keep going up. But what's interesting here over the past, you know, couple of years here in California, our home prices have gone up. You know, during COVID alone went up almost 40%, and yet insurance prices went up 10%, 11%, you know, somewhere in that range, which just goes to show that from a, you know, just from a business standpoint, if you're an insurance carrier, they have to insure that entire figure and the cost to rebuild, and they've got to make a profit. And so they've been struggling to do that when home prices going up so fast and their rates have not been able to follow suit. Katie, do you have anything you'd want to add to that?
Evan hit on so many great points. Evan, you really did an excellent job explaining that, because that really does put it all in a nutshell of what happened. And yeah, having the rate, well, lack of a better term, rate freeze for 2 years, that really impacted, because they didn't quite start turning away business in the beginning. So they started soaking in all this business, but then, you know, they have to be able to go and take care of their reinsurance partners as well. But if their loss ratios are out of control, that affects all of that too. So that's where the pause, and, you know, we all see why it came. You know, it was a consumer-based issue. Everybody was complaining about, you know, having to go to Fair Plan and the premium spikes and everything else. So, you know, okay, let's pump the brakes on raising rate for a little while. But it really did a lot of damage by doing that, because, you know, we started noticing when carriers started pulling off of our radar. You know, we use like a general radar, and then we're calling the companies going, why aren't you on there anymore? And they go, well, we pulled ourselves off because we don't want to be your go-to. And then we start getting notices, hey, you guys can write 2 packages a month. Hey, you guys are on pause. And we're going, oh my gosh, where do we go? So our response, I think we actually did a fantastic job as a company, was to go out and find some more partners that were writing and really get in front of it and, you know, change what we were doing at that point. Still be there for the consumers, be there for our partners. And I think that this team has done an excellent job at doing that. You know, it's definitely gone more into a non-admitted side. You know, a few years ago, all the carriers were like, oh, we're coming out with a difference in conditions. We have a wrap for you. You know, you have to write the Fair Plan. And now they're coming out going, we're pumping the brakes on the wraps now too, because again, they're getting saturated, but we're going to come out with a non-admitted product for you in the state of California. But I like the way they're handling it. I have a lot of carriers approach myself and part of a team, and they ask us, if you could wave a magic wand, what you need from a carrier of how you'd like us to rate, what would you like to see us do? And, you know, the first answer that we always give is look at per risk, not the area. Stop looking at the zip codes and let's drill down. Let's look at the house. Let's look at the risk that we're looking at. Let's look at the surroundings of the house. Does this house have the mitigation that it needs? Can we consider this? And companies are starting to listen to us. Granted, it takes the quote process longer, the binding process longer. It's not perfect, but it's a way to possibly get some more consideration in some areas. So not the fastest thing working, but I feel like it's a step in the right direction where we're at right now.
Awesome.
Thank you for that.
And kudos to Katie. I mean, Katie has worked her tail off to go out there and talk to other insurance carriers and find as many markets as you possibly can for us as the agents to be able to satisfy the Jason Russells of the world and get you a quote when you send a request out to us. And that's our goal is to get you a quote, get you the best thing that we can find. And I even team up with other agents at my office at times just to hey, what, you got an idea on this one? What do you think about this one? Where could we go with this one? I mean, we work together. We're a great team, and Katie's the leader of that team and does an awesome job of bringing us all together and keeps us moving forward.
Well, I can honestly say, again, from experience, you guys do an amazing job, and thank you for all the extra you put in. We do appreciate it as agents. We couldn't do our job without you, so thank you. So next question, can you give us a summary of what happened in LA from an overall and an insurance perspective?
I mean, I can certainly try and just summarize the event as a whole, right? So for those, I mean, I think we up here in Northern California, we understand the idea of wildfire and the risk of drought and the things that can potentially cause wildfires for us. But what's unique, I think, to a degree about Southern California and what the data suggests is that wind, more than anything else, is really a true factor when it comes to wildfire. And that's what the LA fires, the Palisades fire, the Eaton fire, really wind, the Santa Ana winds specifically, which are the winds that come through the kind of mountainous regions of LA, they gust upwards of 100 miles an hour. And if you have one spark from a utility pole, which appears to be the case in the Eaton fire, one little spark can blow 100, 200, 300 yards, and it's just impossible for the firefighters to keep up. And, you know, what we essentially have seen to this point is that we're at 16,000 plus structures that burn. You know, Evan touched a little bit earlier on the Camp Fire that we experienced here in Northern California almost a decade ago. That, for reference, burned 18,000 structures. So this is a huge, huge event that we saw in LA. They're suggesting that, you know, given the value of some of those homes, especially in Palisades, for example, the losses, the dollar losses are going to be just huge. They're estimating, depending on who you listen to, 30 billion, 45 billion, somewhere in that range. And I would love to get, you know, Katie's expertise just from a fair plan perspective, just because my understanding is that the whole Palisades area, State Farm kind of pulled out and other insurers pulled out. So there's a lot of fair plan exposure in that area. And so I'm curious, you know, if there's what you know, what's going to happen, or is Fair going to be insolvent? Like what comes next? Sorry,
what happens if they do become insolvent? That was our next question. So if we can put all that in one.
I want to add one thing too. I'm actually a victim of the fire at Orville when it started a few years ago. I just purchased a vacation home close to the lake and closed escrow. The next day, it was on fire. But there was fire surrounded my property, and the Fair Plan is only the one that actually accept the insurance policies. But like I tried multiple insurance, they do not accept the policy. So I know sometimes with that there's so much struggles, and we're trying to figure out, you know, what company that will help us, especially, you know, homeowners, and we're agents and going out there to help buyer and seller. So that's why this came up, because it is some of the concern that I have past experience, and having you guys to come and really give a perspective, an insurance perspective, is really helpful.
So, yeah, and just real quick before Katie too, just to throw in something that I was thinking about, is like for us at our agency, it's always been stressed not to cut corners on coverage, you know, and I've had conversations with Jason before, because he's sent me a client and they've got a quote from the same insurance carrier, and they're $500 less or $400 less, and I call them up and I'm like, yeah, but like they don't even have liability on the policy, or they, you know, they're insuring their home at $200 a square foot, and I've got it at $325 or whatever it may be. So Nobody's perfect. We're not perfect, but we do our best to consult with the client and really have that kind of consultative approach with the client where I go through everything, try to make sure that I'm, offering them what I can offer them, not, overloading them with every single coverage that we have, so they're paying or can't afford it, or they can't even get a loan because the insurance is through the roof. But we really try to do our best to give the client, comprehensive coverage so that they're
Right.
covered if something happens. I've had some big losses, liability losses, house burned down to the ground, it becomes real. It becomes real. And I have to sleep at night, so I want to do the best I can to offer the clients a good product and good coverage.
Well, honestly, I wish I know you guys a few years ago, so I don't have to have a experience with fair plans. I don't really have a good experience with them. There's no response, and it's really hard. So my next question is basically, if the fair plans become insolvent due to the fire, what impact could that have on homeowners? In your
Yeah, there's not, so I don't know if everyone here is aware, I do sit on an agent council with the California Fair Plan. This was just developed last year. It's brand new. There's only 9 of us in the state of California that sit on this council with Fair Plan. So it's an opportunity for us to bring things up. We just had our meeting last Friday, and we shifted our entire conversation to claims. Instead of anything else that we were talking about with this, in light of this, we all decided to shift it to claims. And so that was obviously one of our questions was, what's going to happen? Where are you guys set up to take care of this? The answer that we are provided, and this is from them directly, is the California Fair Plan has payment mechanisms in place, including reinsurance, to ensure all claims are paid. Now, I will also tell you that there is such a thing as assessment. They can go and assess our admitted carriers as well in the event that they need more help. And the last time this happened was in 1994. So the odds of that happening here, we don't see being very likely. The Fair Plan doesn't seem too panicked about this. As far as time responses, they need to reach out to their agents. The beginning time always takes a little bit longer, just because of the pure, a volume of coming into them. But reach out to your agent. We've done it for our clients. We will then reach out, and it's not just Fair Plan that's happening, by the way, too, with time responses. Like you were saying, it's hard to get a hold of someone. It is happening with other companies too. This is where having your agent matters, because we will step in. There was 3 of us at one point working on a whole different and not Fair Plan, a whole nother one, getting a claims adjuster on the phone so that they would call our client after they had been displaced for a week and hadn't heard from them. And we will go to bat for our client. So as far as Fair Plan going insolvent, there is no matter of fact speaking. They do have, again, a way to assess from admitted carriers. So they don't seem too worried about that part, even going through the amount of.
Can I just ask a quick follow-up question to that, MayMay? So the idea of an assessment, just for those listening who don't really understand what that means, is essentially that the insurance carriers, which is basically anybody who operates in the state of California, admitted, excuse me, and any of those insurance carriers could be required to pay an assessment to basically make up any funding gap, right? So if and again, I don't know the exact, I'm not the treasurer, right? But if reports that they have $370 million in cash and another $5.5 or so billion in reinsurance, if they have $6 billion in exposure in Palisades alone, the numbers are getting real close. And so I think some of the concerns that homeowners are hearing and seeing when they listen to the news or read the newspapers is that if this assessment happens, that the admitted carriers will push that cost assessment on to every other homeowner in the state to make up for the gap. And so I'm just curious how likely that may be, or if that's a realistic scenario.
So I will say that anytime that an admitted carrier wants to take rate, for lack of a better term, they have to file it with the Department of Insurance. They can't just take rates. So the Department of Insurance has to go through a complete approval process, and there's a huge paper trail they have to go through in order to get rate. Some of them have been sitting and waiting for rate for 4 years and still don't have it because it's either not justified. Some have had it pushed back to them and said, we're not approving that, but we'll approve you for this. So just because they file for it doesn't mean they get it. So I understand. I mean, I'm a consumer too, like Evan said, we don't get any breaks either. So it impacts all of us. So we definitely, want to do our best to make sure. I will say on another note, while we're talking about carriers, I've been meeting with some of our carrier representatives, and I'll tell you, they don't seem real concerned about going into 2025. Some of them are still optimistic about possibly still being able to open up a little bit of capacity later on. That conversation has not shifted because, me, I'm sitting over here going, man, I was coming into 2025. I'm so excited. We're going to open up. We're going to get some more markets. It's going to be a great year. And then it's like, psh, Happy New Year. Here's a giant fire. And I'm like, oh gosh. But, I have sat down and had meetings with Travelers and Mercury and, some of these bigger guys. And they're literally sitting across from me going, yeah, no, we're still looking like it might be okay. We're still looking to take this, looking to grow this. And so right now, I feel that was definitely a different message than we got after Paradise. So, I think coming into this too, though, we have to all stop and think they just came off of being paused. They just got rate, and when they got rate this time, you guys, they got massive rate because previous to the rate freeze, they typically would file for a 6.9% rate increase, usually twice a year just to keep themselves where they need to be. So these guys, when they're getting rate, we're talking in the 20%, 30%, they're making up for some rate. So I feel like they're coming into this a little more prepared than they were before, if that makes sense.
So Katie, I actually heard some rumors that with the FAIR plans, there's a limit that they can claim, like 2-3 millions, right? Can you kind of?
No, they only write 3 million total insured value. That is the max that they write.
Okay.
So that should always be, like Evan said, it is the agent's job writing it to explain to the client what they have and do their best there are companies, they're very hard to find in California that can write like an excess over that 3 million of property. They're very pricey. They're very hard to get. And most of the time when you get that quote, your client turns it down.
So what happened to the one that is over 3 million? How did they get insurance?
They buy what they can buy from the California FAIR plan, and then we do our best to go out and find them an excess if it's there. And then it's up to what the client accepts. All we can do is offer the coverage, let them know their exposure, but we cannot force them to buy it.
And I would say, especially in Palisades, where the average home price in that area that burned down is 3.5 million, right?
Yeah.
Like those people are exposed above that $3 million threshold. One of the things that's interesting though is obviously if you don't have a mortgage, which obviously there's a lot of wealthy people living in the Palisades may not have a mortgage, you're not required to have insurance. So there are a lot of people who may have just gone completely insurance free, understanding that they could weather the risk if something happened, and now it certainly has.
So that leads into my next question though. And I've been asked this question. I didn't know how to answer it. And I asked Jason, whom I go to for everything. So I heard that LA has some sort of moratorium going for insurance from, I believe the date was October, went back to October, beginning of October somewhere to now. Can you explain that, how it works, who would be impacted by that? And is it just for LA or is it like California wide? Because there's been a lot of people that were not reinstated or re-upped or did lose their insurance.
Evan, you want to take that or you want me to?
Yeah, I mean, I can start, and then Katie, you can take some more of the stuff that's happened recently that's been announced by the the Department of Insurance in California. But I mean, basically, this has been happening moratoriums have been happening for 10 plus years since Paradise. Like if there's a fire in Paradise, or if there's a fire in Southern California or wherever, we get notices pretty much immediately from the insurance carriers that there's a moratorium where you can't write new business in these zip codes. Sometimes it's 10 zip codes, sometimes it's 15, sometimes it's 25 or 30 zip codes, depending on how big the fire is. So basically what they don't want to happen is they don't want there to be a fire happening and then somebody doesn't have insurance and then they call their insurance agent and basically said, there's a fire at my front door. I need to get insurance right now and go get insurance. That's why, like for flood insurance, for example, flood insurance, unless it's required by the lender at a closing, you have to wait 30 days for your flood insurance to take effect if you buy it on your own, if it's not required for the loan at closing. Because again, you hear this massive storm is coming and you're like, oh, I need to get flood insurance right tomorrow because this massive storm is coming. You can't do that. You call up and you got to pay for the insurance and it becomes effective 30 days later. So kind of similar, but that's what the moratoriums are on, like an actual fire that's happening right now, basically saying you cannot write new business in these area codes because there's an active fire in the area. And I know there's other moratoriums, that maybe Katie can touch on too.
Yeah. So, they call them fire moratoriums. And it depends on carriers. So we have a couple carriers that they actually just stop writing in California. They're just done for now. They'll turn it back on maybe once the fire is a certain amount contained or it's been a certain amount of time. I actually just met with one of them yesterday and they said, we're not accepting new business in California right now. They're not non-renewing, and they said, we don't know when we're going to turn it back on. They want everything to resolve a little bit more. And then we have carriers that, like Evan said, will give us a list of zip codes. And right now, between the Palisades and the Eaton fires, it is pretty heavy, what we're seeing on that. And then the other moratorium that's happening is there's what's called a non-renewal moratorium. And Deborah, I think that's what you might be referring to.
I think so, yeah.
So basically, it does only impact the zip codes in the state of emergency issued by the commissioner.
Okay.
So
yeah,
you guys can go on to departmentofinsurance.ca.gov. On that very first page, you're able to pull that state of emergency notice. It is public information. There's also a box that you can click and you can share it with clients too, where you can actually input your zip code there to see if you are on that moratorium list. What that means is if a company had issued you a non-renewal within a certain amount of time, say, even if it's just, gosh, we saw moss on your roof or there's debris, the companies then are going to have to send a reinstatement.
Okay, that was the question. You're right. Yeah, that was the question that I was asked.
Now, I would like to clarify a little bit further on this because there have been some companies, and we as an agency, one thing that I'm in the middle of heading up is disputing some of the decisions because basically the state of emergency states that they have to go pull the non-renewals for the wildfire, okay? But Commissioner Lara made a bunch of recommendations to insurance companies that they should be lifting other non-renewals. Basically, all insurance companies have listened. I've sat on multiple claims meetings with multiple insurance carriers at this point, and they're all lifting them. There are a couple, though, that are sticking to where I'm in the middle of fighting one right now because they're trying to stay on a non-renewal for claims because they're saying it's not because of wildfire. So I grabbed that, sent it back, and I'm in the middle of a fairly large dispute right now. So, it just always, if your client for any reason is working with an agent and the company says that they're not going to lift their non-renewal, have them, and they're in the impacted area. Let me be very clear. It's not for everyone in the state of California that's being non-renewed.
Right.
Literally only for the zip codes that are listed in the state of emergency that's on the Department of Insurance website.
Yeah.
Got it.
So if they're in that list and their company is trying to stick on a non-renewal, the agent should really be working with their client because I know we certainly are. So.
Katie, can you actually explain for one of the a question that we have? Can you explain the Senate Bill 824 and how people can apply for assistance?
Evan, do you know anything on that? That one I've not.
I did see that question and I wasn't, yeah.
Yeah, that was a question from one of the audience, but I can Search it up.
Maybe, I don't know, maybe we can look into
Yeah,
that
and we'll get back
after the
to
call
back
and
on that
try to
one.
get
Yeah.
back to,
Thank
Yep.
you.
try to get back to Jason on that stuff or all you guys, and he can pass it around.
Yep.
Well, we have a question for Jason. Jason, so what do you think the insurance issues current are meaning for us real estate agents and real estate moving forward?
Yeah, I mean, I think there's just so much unknown here with what the insurers are going to do. But what I would point to as kind of a worst case scenario would be Florida, right? If you look at what has happened in Florida, just from a real estate perspective, to kind of go back a couple of years ago, there was a condo complex in Florida that collapsed. People, and it killed 100+ people, and that condo complex collapsed. And as a result, what happened is everyone started digging really deep into the insurance. What's going on? Why was this building Fannie Mae approved? What was going on with the HOA? Did they have enough reserves? What was their coverage? There started to be these questions. And then as we run into wildfires here in California, Florida has problems with hurricanes, right? So they have their own natural disaster, climate change related issues in Florida. And one of the things that we have seen, and maybe Evan and Katie can speak to this more, but what I would say is that they are experiencing massive increases in insurance there, and they're seeing insurers leave the state because they just can't be profitable at the end of the day. And at the end of the day, guys, insurance companies are businesses, right? And they've got to be able to turn a profit. And so from a real estate perspective, what I worry about is that as more insurers leave a state, if that were to happen, and it sounds like from Katie that might not necessarily be the case, but if that were to happen, the insurers that remain will just get more and more expensive. It's supply and demand, right?
Yeah.
And we have a really stressed affordability issue right now when it comes to someone buying a home. Obviously, home prices are at all-time highs. Mortgage rates, while not all-time high, they're certainly the highest we've seen in the last 15 years. And you combine that with the possibility of insurance also going up. If someone, if Fair Plan has to cover more and more areas, now all of a sudden the demand that you have for that real estate gets lower. And you can probably see this in rural properties in our area. As you go up the hill, you start to see this, that homes start sitting longer. And the longer they sit, you have to start considering a price cut. And if that property cuts its price, the next property that's on the market also is going to have to cut its price because we have a comp now, right? And so this can be a kind of a really scary scenario. And to give you just kind of a visual of what that could potentially look like, this is the worst performing markets as far as real estate is concerned in the country. And as you can see, Florida, Louisiana, Louisiana, Texas, like these are A, hurricane areas, and B, areas that really ran up during COVID. And so all of these things have that in common, that insurance is a problem in these areas. And if we in California have similar problems that we run into, that could certainly point real estate values in a negative direction. Now, is that a likelihood? I'm not going to say that, but it's absolutely something that we need to keep our eye on as professionals and just continue to monitor. And we need to be in support as we talk to our legislators, as we talk to our leadership in CAR and at the MBA and anything that we're involved in here in real estate side to solve this problem. And I don't know what the solve is. I'm not smart enough to know, but I know that if a company cannot turn a profit at whatever their business is, whether you're selling ice cream or you're selling insurance, you will just leave the market. And that is not good for the market as a whole. So I'm certainly open if anyone else has feelings on it, but that would be the thing that I keep my eye on.
Good information.
The only thing I would say about just insurance prices in general is one of the things that I've actually always talked to my clients about going higher deductibles on auto and homeowners insurance, but now going even higher, and for me, like protecting your home if it burns in a fire. If you have a $10,000 deductible versus a $2,500 deductible, hopefully that's not going to bankrupt you, right? But you could save some money, and you could help you qualify for a loan to buy the home. If you're saving, $300, $400, $500, $700 a year by going with a higher deductible. I mean, I've raised my personal deductible to 7,500. I used to be at like 1,000, then it was 2,500. Quickly after I got in insurance, I went with higher deductibles. Auto insurance, I still have people that want to do like $100 deductibles on comprehensive and $250 on collision. I'm just like, I'm just telling you right now, man, you want to stay away from filing claims as much as you can. So, protect yourself from liability. Liability is one of the biggest things that could hurt you on auto insurance. Not having enough coverage or not having coverage at all on your homeowner's insurance, is something that can hurt you really, really bad financially. But going with a higher deductible, if you have to pay $1,500 more or $4,000 more or even $9,000 more on a deductible, to be able to afford the insurance each month or whatever. I mean, nobody wants to pay the deductible. Nobody wants to have a claim, but that can be, a solution. So everybody I'm talking to now is, encouraging to go higher on deductibles to cut off some of the increases in premium. So that's one way to do it, but not 100% solution.
So Evan, how people proactively protect themselves and avoid cancellation of their policies?
But to add on to that, Evan,
Yeah.
To a real estate aspect as well, as agents, for those that are jumping into the insurance world, as well as those that currently have insurance that are up for renewal, what can we look for and what can they do proactively to keep those quotes as low as possible and get those insurance approvals?
Yeah. I mean, one of the things, people can look at is the roof. When you're looking at buying a home, I'm actually shocked sometimes when I get on the phone with a client and they have no idea how old the roof is or what type of condition it's in. That's kind of shocking to me. So I think, customers, real estate clients, people wanting to buy a home, need to do due diligence when they're looking at the home, knowing what the piping is, the electrical. And Katie, maybe you can touch on some of the specifics on this stuff too. Because I know you're really good and have it on the top of your brain. But looking at the roof, how old's the roof? Is it concrete tile? Concrete tile, most of the carriers aren't worried if it's 27 years old, but if it's a comp shingle roof, there's carriers that won't even take it.
What do they like to see, Evan, on a comp shingle roof as like a standard? Where do you start seeing that line where they're just like, oh, heck no, we're not going to touch it? Is it 10 years? Is it 15?
It's
Is it 20?
typically around 20, 25. I mean, we have a carrier that sometimes if it's 17, 18 years old, bamboo, they'll only cover the roof for actual cash value. So you're actually starting to see that a little bit more, is if the roof is older, they're only going to cover it for actual cash value. So for me as the agent, I have them in my notes that they e-sign. I say, hey, I just, I put the description of what actual cash value is, and that here you're signing off that you have actual cash value coverage on that roof. So that's one thing. So basically they're going to pay the depreciated amount, the amount that the roof is kind of worth at that time of the loss, instead of paying what it would cost to replace the roof brand new. So that can vary, but typically with bamboo, it's a little bit less, because they do offer the actual cash value coverage, but I think they're around like 15 years or so, but most of them are 20, 25 years. I think Mercury's 25 years, but it also needs to be in good shape.
Yeah.
They're getting more sophisticated too. I wrote one and Grange came back and said, this has got a roof score of I don't remember what they told me or how the numbers all work, and so we have to insure this for actual cash value. And
I mean, those dang drones, man.
I know.
The drones
so I had to go back to the client and explain it to them. They wanted to like just cancel the policy. So I actually fought for him and begged and pleaded to the underwriter, and so they kept the policy, but they had to go actual cash value. And I just told them, I said, hey, if you replace the roof, at any point, let me know right away. We can get rid of that actual cash value coverage and get back to the replacement cost. Trees overhanging the roof has become a huge issue too, that I've seen. So like some of the carriers are a little bit more strict on it, but so when you're going to buy a house, look at trees that are overhanging the roof. If they're overhanging the roof, there's a possibility that could be tougher to get insurance, or the agent just bowls through it. I try to do the underwriting up front so the client doesn't run into issues on the back end, because I don't want to deal with that. I don't want a client calling me or getting a memo in the mail from the insurance carrier saying we're canceling this policy. We're doing a new business cancel on it because there's trees overhanging the roof. And if they don't trim them, then we're gonna cancel it. They have an opportunity of 30 days to trim them, and then all of a sudden you find out to trim them it's going to cost 15 grand because they're 30, 40-year-old trees. We've run into that before. So I try to do as much underwriting up front too, and that's another thing that I think we do. At least I try to do at Acrisure as a personal lines agent is really, it may not make people happy all the time, my clients happy all the time, but I don't want them to run into back end issues, because then we're scrambling to find another carrier for them. And they're also saying, then the other carrier is wondering why they got canceled by this carrier A. Carrier B is wondering why they got canceled. And if you're being truthful on the application and it asks the question, have you been canceled or non-renewed? You have to answer the question correctly. And that can sometimes run into some issues there. So definitely roof age, roof quality, moss on the roof, trees overhanging the roof is a big one. I talked about electrical. Maybe Katie can get into some more details on that stuff too. Obviously the home has to have like a thermostatically controlled heater. You run into some of that sometimes in the Tahoe and Truckee and stuff like that, where their main heat is just like a freestanding pellet stove or whatever. So thermostatically controlled heating is something that you're going to see.
You think maybe you can put a cheat sheet or a list together on something like that for us?
Katie has a perfect list. Yeah,
I have some bullets and I can actually drop it in here.
Yeah, that would be great.
Okay.
Yeah, that would be really great for us to share.
And these are just some, and of course, we're always here for any particular questions or clarifications, or, if anybody wants to have a side conversation a little bit more in depth.
Yep.
Well, I think that like as agents, we learn a lot, right? As lenders, as agents, the numbers are the numbers, right? We are all bound by numbers, like appraisals, insurance quotes, all of that. There's not a lot that we can escape from. I think that what really matters is the service that you get from your agent or broker. And those that just don't try to throw, just like agents don't try to just throw a policy at you to get the deal closed and not explain it to you or whatnot. And I have to say, and I know this is being recorded to share, and there's agents here, I have closed a lot of deals with Jason and Evan, and I have never had one complaint, not one complaint over this team right here. And we're talking about hundreds of deals. So again, thank you for that. And I just kind of wanted to share that because when you're going through it, the facts are the facts. That's why I asked for the bullets, because everybody can go off of a cheat sheet, right? To make your job easier. The numbers are the numbers, but even the way that you just explained the deductibles, that's a lot of good information and extremely helpful.
Well, and by the way, you guys we can work even better together as a team. If you're explaining this stuff up front to the client, then it makes it easier for me.
Exactly.
Sometimes if the client has waited 24 hours to e-sign a document, I'll be like, Jason, hey, I've followed up 3 times and they haven't e-signed this document. All of a sudden, 5 minutes later, they've e-signed it because Jason gives them a call or whatever. So if you guys are talking to them about like, hey, Evan's going to work with you, I'd recommend, going with higher deductibles, getting that premium down. You don't want to file small claims. You don't want to use your policy as a maintenance policy. You want to use it as a catastrophe policy. Then that kind of that warms them up a little bit to the idea.
Well, I think a lot of that stems from us not being knowledgeable. right? If we don't have the knowledge, we can't share that. So
Yeah.
little conversations like this are really good, for us to all bring together and get that. So, and we'll do a better job at doing that.
And
And by the
Jason,
way,
I know you have to go soon,
you
so
guys
I
are
wanted to
amazing.
touch, thank you, you guys are. Jason, are there any lending programs out there to help people affected by the fires right now? Or do you foresee any?
Yeah, I would say there's probably two that are worth mentioning. The first of which is for specifically people who have lost their homes to the fire. FHA offers a program known as the 203H. The standard FHA program is a 203B. You may have heard of a 203K, which is a rehabilitation loan. These are the 203H is specific to someone who lost their home to a disaster. So the great thing about that product is a typical FHA requires 3.5% down. This product requires 0 down, and otherwise is a standard FHA qualification, which, as you know, is quite liberal as far as those qualifications. The other piece that I would mention, which has already allocated all of its funds for 2024 and has not yet re-up, but the GSFA, the Golden State Finance Authority, they have a program called Recover CA. And that program is not necessarily, you don't have to be a victim of the fire. You just have to have lived in an area where you could have been impacted, and you can get up to $350,000 as a forgivable second to help you get in the house. So it's an incredible program. Again, they're out of funds at the moment, but I expect that they will have some additional funds here before too long. So certainly something to keep an eye on.
well, that's good
Thank
info.
you.
Awesome.
Thank you. And if we can maybe get, something with those on as well, Jason, to share, those programs would be great.
Yep.
And then Evan, you're our guy for the hour. So a lot of people are blaming the government for the issues with insurance here. How much of this is the government's fault in terms of insurers leaving the state?
Yeah, I mean, I don't know. I don't want to get into political issues personally on a call like this. Maybe we could have a side conversation about that. But no, I mean, I guess the positive way I look at it is I just wish that everybody, I think this could be a wake-up call for everybody involved. And hopefully it is. And hopefully everybody takes a look in the mirror and says, hey, we got a problem here. This is a big issue, and this is affecting our state, and this is affecting our citizens in the state. And so we need to find a solution. And, price control, maybe wasn't the greatest solution. I don't know. That's not my job.
Well, you say price control, but that was the next question. We've heard that there's been price gouging in LA. How's that being handled?
Well, I mean, Katie said it earlier that I only thing I've ever seen on price gouging. I did see something about like real estate agents were doing some price gouging or whatever, but I know nothing about that. But as Katie mentioned earlier, insurance carriers can't just all of a sudden raise prices. They have to go through the Department of Insurance. They have to file tons of paperwork. It's not going to get like you don't file something on Tuesday and then it gets approved and all of a sudden your rates have increased on Thursday. I mean, I'm not an expert on it, but it's a process. It's not something that's going to happen overnight. So there's not going to be any price gouging that I'm aware of would even be possible in the insurance industry, because it's all the rates are approved by the insurance commissioner and filed by the insurance carriers. And like I said, it's a process.
And I would just add, just to answer the first question on the politics side, right? Like, I don't think anybody did anything nefariously, right? Like, I think at the end of the day, the policy direction was, we want to protect consumers, and therefore we're going to cap the amount that insurance companies can raise their rates by. And insurance companies in a free market just said, okay, we'll leave. And they left, which the market then takes over and prices go up. It's more difficult to get insurance, et cetera. So, the Ronald Reagan once said that the scariest words in the English language are "I'm from the government and I'm here to help." Right? Like it's there's the idea of what sounds good and what is actually good in practice. In regards to your gouging question, I did put a post in from that I actually saw on CAR's Instagram. They had a presentation with the legal counsel of CAR because agents had questions of, well, I didn't, if I'm a landlord, I didn't necessarily raise my rent. The renter offered me more. And CAR's legal perspective is you can offer more, but you as the tenant are not allowed to charge more because then it becomes gouging, right? So that's the I think the side that the gouging piece is coming in is just it's supply and demand, right? Like if you lost 16,000 structures and half of those were houses, just let's say you have 8,000 people or 8,000 families that need somewhere to live, and you still have the same or fewer amount of rental properties available for them to live in while their home is rebuilt. So of course, supply and demand, right? We have higher demand, we have lower supply.
Yep.
Landlords are going to raise their rent. And in a disaster, that's going to be considered gouging. And so I think if from an agent perspective, if you're giving guidance on that, follow CAR legal, follow the counsel that you're given from your association as to what's allowed and what's not. And again, I put that link in the chat if you're interested.
Yeah, like auto insurance, for example. I know we're talking more about homeowners insurance, but COVID hit 2020. People were at home, so insurance carriers were trying to do a good thing, and we were all getting some rebate checks. Everybody was calling in. Everybody is calling in to lower their mileage, and so they're granting that wish to lower your mileage. And so how long does that take to catch up? And then all with the mileage. And so they're not properly rating the risk. And then people go back to work. And then you also have at the same time, the cost of repairs was going up incredibly. Like I even experienced it, and the cost of doing repairs going up, but then also the amount of time it took to get the repairs done on your vehicle was crazy. So then you got things like rental reimbursement that they're paying out during that time. I mean, I have a Kia Telluride. All of a sudden, we had a broken windshield. That thing cost $1,500 to replace the windshield because it's got that, the heads-up display and all that stuff. So everything is getting more expensive to fix. And
that's for sure.
It's taking longer. And so that was a vicious cycle with the auto insurance. So now we don't even control the mileage on the auto insurance. They have ways of kind of figuring out through service records and different stuff that how many miles you drive, which I actually like because I always try to be honest with the mileage, but you have other agents that aren't. They price cut the policy. They lower the mileage on purpose because the carrier allows them to do it. So the person really drives 9,000 miles a year or 12,000, but they put 4,000. So then you don't want that. Nobody wants that because then everybody else ends up paying more.
Paying for it,
because the honest agents are doing a good job in rating the risk properly. But if you have somebody that's a not dishonest agent that goes and puts 2,000 miles and everything because the carrier allows it and doesn't underwrite it and doesn't come back and say, prove to me that somebody drives 2,000 miles, we all suffer.
Yeah.
We all suffer. So it's actually a good thing that they have more control on the mileage because then it's properly rated and then you can rate for the risk properly. People ask me, why do I have to include my cousin? They're in the household. Why do I have to rate for them or exclude them? Because if they have a DUI and they drive your car all the time and you don't have to rate for them or you don't have to exclude them, why would you ever even add them? You wouldn't add anybody. You would just have yourself on the policy with the best record, and then everybody else is automatically covered, right? So people ask me that all the time. Why do I have to exclude my cousin who's in the household? They don't drive my car, because we all need to properly rate the risk so that we can all have,
And that's why we need to have a great conversation with you prior and make sure our clients have a proper consultation with you to have you help us on those, right? So,
yeah.
Great.
And I think this was great because I learned a lot
Me too.
that I didn't know, and I've been doing this a very long time. And this is just, again, for the agents on the line, this is just adds to your value proposition with your clients. I mean, this is education. You're helping to prepare them to get the best service and the best deal on insurance, which they need in order to purchase a home. So this was good. Thank you.
Also the wildfire victims, right? Whatever that we need help, insistent. Well, Evan, team, Renee, and Katie just left, and they can be able to help assist answer any questions.
And not
So
just wildfire. I mean, you heard him. Auto insurance, homeowners insurance here. And, you know, let's face it, California, they used to say if you lived in Sacramento, if you lived around the California area, we were pretty much safe from everything, right? This was the place to be safe from flood, from fire, from earthquake. Not anymore. Not anymore. So, I mean, insurance, we need insurance. We're right here with them now. So,
and our expense is not getting any lower.
No, nobody's are.
Cost of living is just so high.
Yeah.
It is.
Awesome. Great chat. And hopefully if we have any other questions, I think Evan already have your contact there, and I will share to anyone that needs it. And we can continue for another time.
Thanks, guys.
You guys are awesome.
Everyone.
Thank you so much.
Have a
Appreciate
good
having us
night.
on.
Thank
Thank
you.
you, everyone.
Bye.